The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Hey, beautiful Tuesday, August 21st down here. I had a nice trip across the causeway today. Nice wind, especially when it's warm out there. Nice to have a breeze, a little white cap out there. Sometimes I take it for granted how beautiful the ocean is, and every once in a while, you get that nice 10-15 minute trip across the causeway. Pretty much, 10 miles without stopping. Get to watch the waves in the ocean and the birds. Always a gorgeous day. And the only thing that would have made it better was spumani. Yes, the wonderful Italian treat that is the ancestor of Neapolitan ice cream, but it is thought to be better. Consists of multiple layers, usually 3, of different flavors of gelato with little bits of fruit and nuts mixed in. Today we celebrate you, National Spumani Day. I've got to have some ice cream now on the way home. Anyway, a gorgeous day. We've got a market here kind of in flux, would it be? Volume's a little better than we've seen over the last couple days, coming in at about 2 billion shares on the consolidated New York Stock Exchange tape. We did go to a high of 1426 on the S&P cash, printing off just about 1417 now, so off maybe about a point. A lot of this kind of up and down action is expected, as this is the last day of options rollover. The Wednesday before expiration, Delta market makers always go Delta neutral. Delta neutral is a way of selling both puts and calls, or buying or selling underlying equities to make sure that there's no significant changes to their profit for those last 8 days as we get into expiration. And it gets wild, let me put it that way. They want to be able to have probably about the last 8 trading days without any real exposure, or as little as exposure as possible. What happens the day after expiration? We go right into options rollover, where some of those equities that were bought to hedge their option positions that they've had on for a while are taken off, new ones are put on, and new options are sold. You need a little bit of up and down action. I tend not to write a lot into exactly what's happening, but I think more people are probably going to look at companies like Apple that had a high of $674 today, and now is back at $656, and say maybe we've had a little blow off top up here to the top, and a little bit more volume coming in. I'd love to have seen 3 billion shares come in now, really a big clue that we put in a top, and not just more hijinks that has to do with options expiration. So we'll keep a close eye on the volume and the movement of the S&P over here over the last next few, actually you're off 1.5 now. Probably a good opportunity. I was looking for options to buy today. Didn't really find anything I liked, although this is about as good as you're going to get with a low VIX. Of course, VIX was at a low of 1346 today, which is probably one of the best opportunity if you're going to buy options and to do that. I had several ones that I wanted to get for my newsletter. Unfortunately, they were just too thin today to actually get in. So we'll continue to keep an eye on that. Now into the news. I had some questions from the mailbag, and you can always email me at path@tfnn.com. One of my first questions is, where is I'm getting the legal news on patents? There was a website called Grok Law, Grocklaw. It is a website, actually an award-winning website, covers legal news of interest to free and open source software community, plus Apple and Oracle and all that. It began as a blog in 2003 by a paralegal, Pamela Jones, PJ as she's known on the site, but she's turned it into kind of a little business out there and seems to do pretty well. But if you check that site out, you'll find a lot of the articles that have to do with it. Google has added a patent search option to its system. If you go more and more when you're looking at Google and more things to search for, you'll get into patent search. They've added a prior art search engine to it. Prior art is a let's see, Prior art is a let's see if I can find my right pad here. Prior art is a technical term or legal term in that, did it exist? Did someone already make it before? Did someone come up with the idea? Not the patentee. Were there drawings of it? Were there descriptions of it? Were there specifications for it? Google has put in and extended its patent search to include that prior art category. We talked a little bit about Friday about Apple going to a university professor at University of Missouri in the Columbia Broadcasting, I think it's not broadcasting, journalism school. And that gentleman had been working on a tablet or tablet technology for journalism back into the, I think 81 is when he started. He'd been working on a lot of that technology and showed it to Apple shortly after Steve Jobs came back in '97. So very little new under the sun, Horatio. Forgot the exact saying on it, who it is, but I think it's from Shakespeare. Anyway, a lot of rumors out there today, and I think that they were just that, rumors. May explain some of the blow-off top in Apple today. I'd been talking about how it had gone over the previous high on lighter volume. We'll look at it in a chart in just a minute. But part of the big move is a rumored 7-inch tablet, and people have been farming around examples of that. But they are basically just pictures that have been shrunk of the standard version already. Let me get rid of this. We've been looking at these very light volumes, which in yesterday was 22 million, but it was going up about 31 million at $644 even. Of course, everybody looking forward to the September 12th rollout of the iPhone 5 and shipping late in the month. And still looking to find out whose NFC chip, if any, that they will be using in it. Since no one really knows which Qualcomm chip they're using in it or Broadcom chips, some of those chips that they have now have had that NFC chip added inside them. We're probably going to have to wait till we see the whites of their eyes till we find out who does it. But whoever gets that is probably going to make a nice little bounce off of the iPhone 5 shipping. But looking like a fairly decent candlestick out here. If you're new to candlestick trading or charting out here, we're getting awful close to something that is called dark cloud cover on Apple here today. And that's just what you would think it. It's kind of a dark cloud obscuring, shadowing a previous chart, and you'd really like this thing to get down just a little lower, probably back into the 644 by the close here. So you'll have to continue look at it. I suspect that we're going to end up flat on the day, something like 1416, 1418 by the close. But we'll have to see. I think a lot of this, like I said, is probably a little over this option rollover. And by the end of the day, we'll have a much clearer picture if this is really a huge movement or just a little market gas coming off because of options rollover. What else do we have in the news? Adjusted for inflation, Microsoft's peak market cap in 1999 was actually about $856 billion. Of course, Apple went through $600 billion at its high yesterday. Would have gotten probably up to about 650 625, something like that today at the high. But why people are saying Apple's hit a new high, not against adjusted for inflation on Microsoft's 1999 high. Kind of interesting that we're hitting that. But yeah, we've got about another fourth to go in inflation dollars for Apple to match the 1999 high of Microsoft. When you think about how few products that Apple actually ships and how many Microsoft was shipping in 99, kind of interesting to think that Apple has made it so far. Of course, huge margins. Buffett, our wonderful friend for Berkshire Hathaway, in a regulatory filing last night, showed that he was getting rid of all his credit default swaps. He always called them sewages for years. Kind of amazing that he got into them anyway. Ensuring $8.25 billion of municipal debt. Well, he's wiped all that off, which would make you think if he had about 5 more years to go on these, that he would probably ride them to the end if he really believed that the municipalities were not going to default. We've been talking about it on this show, about how many defaults we're looking for in California, and also Moody's going through a lot of the cities in California that are probably not too far from claiming bankruptcy themselves. Looked like Buffett got out just in time. Exit stage left. Oh, I liked Snagglepuss. I don't know what age break that he went off the television, but I would imagine you have to be somewhere around at least 45 or older to remember old Mr. Snagglepuss. Maybe he was on after that, but I somehow kind of lost touch with him. Kind of a predecessor of the Pink Panther kind of thing. In fact, when you look at him, not too different than the Pink Panther. Anyway, Best Buy, we knew they will. Of course, they've had a low of $16.23. They're back at around $18 again today. But I suspect that this is the beginning of the death spiral that Radio Shack has had. Why they can keep this thing up for probably a year and a half, 2 years. Unless they come out with some really decent ideas, they are done. Revenues of $10.55 billion was down about 3% from the year-ago quarter, and adjusted operating income of $124 million on non-GAAP, which means a lie, of 20 cents a share is down 49% from and year over year. So every time I hear non-GAAP, I just hear real lie. Because if they can't do, especially for a retail store, if they can't do GAAP, generally accepted accounting principles, why can't they? You know, what would be in Best Buy that means that they can't do normal accounting? And I would say almost nothing. There are some companies that don't work well on them. Let's say leasing companies for airplanes. There's some reasons why you couldn't. I can't think of a reason why Best Buy couldn't use GAAP numbers, but that's probably because they've got something dirty and dark, kind of like the crazy old uncle maybe in the attic or the basement. They just don't want somebody to know something out there. We shall be back in a minute. We're going to get to charge a little early today. Give me a call, 877-927-6648.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we're going to be looking at a thing called dark cloud cover. I had a question in the den. Just wanted to make sure if anybody is unsure. It's just basically a decent reversal pattern. Let me pop this back up again. But from Investopedia, nice little picture of it here. The highest price of the day, of course, is exceeded the next day. And then you pretty much get a reversal or a candle that's maybe just maybe a fourth higher on the next day, about the same size, maybe a little bigger, and then normally the next day you have a close back under it. That is generally a reversal pattern on it, and I think we can see just on the light volume. I'm not saying that Apple is going to blow apart. You've got this is the 21st. You've got 2.5 weeks to make it to the 12th. The PR machine will really crank up about the 5th at Apple. All the phony rumors. It's going to be probably a tough time. I suspect the biggest reason that we're probably having weakness is the total lack of anybody knowing exactly what Apple's going to push out the door. Most of what they've talked about so far has not been and what's leaked has not been a big deal. So I think we've got a lot of it. But if you look at that pattern that we're watching here on Tiger TV and in the den, we'll be be kind of back to that pattern that we're looking at right here. Hopefully the engineer was showing that while I was talking about it. He's got a thumbs up for me. We've got to get a monitor so I can actually see what you guys are showing in there, and I know whether or not it's up or not. Or maybe even just a mirror so I can see what's going on in that. Anyway, we're going to look through some other stocks. We had been looking at some of these energy stocks and thought that they'd been making some tops. One we'd been talking about this week had been ExxonMobil. It did kind of tick down a little bit yesterday, looking like it wants to come back into this $86 level. We were really looking at the January 23rd high at $78.49. 19 million shares on that day when we got into that and over it, but pulled back down, got to $88.91 on 12 million shares, but not a whole lot of volume yet. The energy in these is not totally weak, so I'm not going to say that we're going to have some kind of blow-off, but would look very interesting to see this thing at least come back and fill this last light volume gap up, and that would take it right back into the probably what 85, 70 range, something like that, from the gap up that happened on what the 3rd of August out here. So just very, very light volume as we continue to drive back up. We'll continue watching it, but I'm thinking we're probably going to end up 1 or 2 points down, maybe 4 points higher by the end of the day. But not a whole lot of energy either way. We will check back on volume here slightly. So what else do we have? We were looking at VLO also yesterday. It has continued to hold up a little bit better, and you know, as a refinery, I guess they have a retail outlet too. Have done just a little bit, but look like it would come back around to the $28.68 level. And they've got 2 lower gaps out here if energy does start to fade. Of course, we've got crude numbers coming out tomorrow at 10:30 in the morning. Natural gas numbers on Thursday. Again, you can give me a call at 877-927-6648. We can talk about your particular stock. One we were looking at also was Urban Outfitters. It did have earnings last night, and we'll take a look at it here in just a second. There we go. Nice pop-up right into a long-term resistance level, so we're going to have to take a little longer look at this. It had been up on those high levels for a while. Hopefully we've got it going here. Now I knew we were having a little issue here. Let me see if I can redraw it here. There we go. It is filling a large gap, and probably for the most part that gap came down on pretty monstrous volume. That was on 3/8 of 2011. So this gap has existed for a while. It basically had a high at March 7th of $39.26, opened the next day at the, well, what was the open? $32.32. So basically you had $6.5 gap that's been open now for, what is it, a year, 3 months, something like that. As we look at that, we're going to have to see how that volume comes in. But again, what are we looking at here? 17 million shares. Got 18 million shares now. Pretty much going to fill that gap up.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we've got a caller, and it's Scott from San Francisco. How you doing today, Scott?
Hey, pretty good.
So it's
How you doing?
Pretty good. It's got to be a little bit before noon there, but you could have a nice glass of wine.
Well,
maybe with lunch. You're calling about VCO, which is Via Conchito Vatora, S.A.?
Oh, wait. Hold on. Brinks.
What's the symbol?
B, Bob, Charlie, Oscar.
Ah, my wonderful engineer got VCO. I thought you were calling about wine, which I'm more of a 18 and 24-year-old Scotch drinker.
I can totally go either way on that.
So we've got the Brinks Company. What are you thinking about doing with this?
Well, I'm watching that chart, and I don't have it in front of me, so I can't zone in on it. But I'm wondering if there's a possibility of a breakout.
Well, you've got this thing came down on huge, heavy volume, and just a massive candle down. That was back on February 2nd, and this thing has been going down and sideways. You did have a lower low with about a fourth lighter volume. The previous low to that was April 23rd, $21.54 on 410,000 shares. You got back into it and actually got to a lower low of $20.91 on 300,000 shares, and it popped back in the trading range. Now you've got a consolidation. Normally, in this pattern, it's called an asymmetrical triangle. And the first move out of this, if you wanted to draw a line from back to about 720 is the high, and just kind of make a big greater than symbol,
right,
which would take you out probably to about the 1st of September. If normally the asymmetrical triangle pattern, if it goes more than 3/4 into that greater than symbol.
Yeah.
Greater than or lesser than? Greater than symbol. You figure that if it goes that far in it, that normally the first breakout goes to the wrong side. So you would love for this thing to break down and go into that small gap that's just under $22.
Yes.
And see if it could get down there. You've got a low that's what's the low on that? $21.70. That gap back up. You'd want to get it as close to $22 as you could, and then probably put your stop down there around $20.91 if it closed below it, and you could ride it out. But it may need a longer consolidation than you think. This thing is just basing out, and the energy's kind of come out of it. Now it probably need to go sideways for 15 days. I would suspect that if it doesn't have some news, have earnings coming up or anything.
I think they just had earnings not too long ago.
Let me see if I can find.
If I recall right. I'm at work today, so we're going on the fly here.
That's fine. Let me check out if I've got an earnings date, company events on that date, 12th of August, 13th of August. Yeah. So you had the last statement on the 13th. So you're about a week out. Didn't seem like a lot of movement into that. So, you've got some, maybe a nice little move out of here. I would say that this thing is, you probably want to take it to the most normally, this thing's going to get tighter and tighter in a trading range. Yeah. And the first breakout is the false move. So if it breaks out to the bottom, it's a buy. If it breaks out to the high, then it's probably going to go higher and then come back down and still try to get into that $22 level range, which would be kind of where you want to get it. Why do you think? What are you thinking about this as far as a trade? Is there something bigger you know about it or something?
No, no, not at all. I just pulled the chart up one day, and I know about the triangle going. And just kind of wanted some guidance on what's expected on the moves.
Well, what I don't like about this one is normally what you'll see, you can go back tonight and you'll find the archive, I think, in a couple hours on Tiger TV, so you can look at my chart. But normally what you want to see is a heavy move down, and then a lighter move down, and then even a lighter move down. So that you know the energy's coming out of it. The last three moves down from this $31 to $22, and then $29 to $21, and then $26 to $20.
Yeah.
The energy was about the same in each one of them, even with that huge move down. So what you really don't have yet is just the total lack of interest in selling. That's why this thing's kind of gone sideways. Normally, if this last move from 26.73 down to 20.91 would have had real light volume, then this thing would have been a rocket right back up to 26.73. So you got the basis of the end of interest and accumulation picking up here, but I'd say you probably got, I would say, into the first week of September before this thing is going to break out one way or the other. You got time.
You got to be patient. Yeah.
You got time. I appreciate the call, unless you've got something else.
Well, we looked at CERP last year, I think.
Okay.
Maybe the beginning of this year.
Yeah.
And it's totally gone to the basement now.
Yeah. This is the same thing. You each leg down has had fairly decent energy. None of them have ever actually quit, and now it's 19 cents or something.
Yeah, 19 cents.
So it's pretty much done.
Right.
But this was the one you were talking about that did some kind of environmental packaging.
They do. They make the product for biodegradable
plastic bags.
Bags and
stuff. Yeah, I looked at it
Yeah.
after you called about it a few times, and I really never saw a lot in it. But
the thing that scares me now is Europe, is falling apart, of course, and so they just announced that they got something going in India. So I'm thinking, these guys are kind of chasing the world here, trying to keep themselves from going broke.
yeah, at 19 cents, they don't have a lot of room left. So
Right. Yeah.
Well, I appreciate the phone call, and thank you very much for the update on Cereplast.
Thanks, David.
We'll we'll go to some other stocks. But anyway, you can give me a call at 877-927-6648, and we will discuss your particular stock. Kind of an interesting technology, I guess, but they just weren't able to make it cook, apparently, over time. We do have gold up. I had a couple of questions about silver in the email today, and silver's up 73 cents. I continue as a academic argument, let me put it this way, to get all wrapped up in something like gold or silver at these levels. So it's up 50, 60 bucks. I would much rather be looking at stuff that has a long ability to run. And I know, you can make a little money each day off of it. I'm looking normally at a longer term trade than a lot of people, especially in the den, that are really day traders. But to me, I would be, you've seen silver. It's had a nice little move out here. But, what about natural gas? This thing is, to me, this one would be, although I missed the little move out of it, it's starting to consolidate out here. This one, could you see $5-10 in natural gas over time? I think a lot of people are fighting a price of $1,640 in gold and hoping it goes to $1,800. The risk reward in it seems to me to be asymmetrical compared to some other things like just natural gas if you're playing commodities. And I think about that in the stock. I know I spend a lot of time looking and talking about Apple, mostly just because of the effect it has on the index itself, not that I'm really interested in playing it. Apple is up over 10,000% from its, $6.51 low in 2003. Now, when it was $6.50, that's when everybody should have been calling about it. Now, not when it's 100 times higher. Now it's 650. Yeah, so it's over. It's over 1,000. Yeah, 10,000%. Yeah. So on these, it's hard for me to get all wrapped up on silver, wrapped up in gold. When I thought about, when we were buying it early on at TFNN, around $285 or something. I think that's what the price of gold was when I first bought my first double eagles. And to me now, if it moves a little bit now, it just doesn't seem that big a deal. So anyway, just my thoughts on that. Anyway, give me a call at 877-927-6648. We're going to go back to looking at some stocks out here. What did I want to look at? We continue. We'd seen some movement in, I want to go back at FSLR. With crude up here so high, you would think that if it was going to hold, I've been looking at these solar stocks to see if even some of these beaten down ones are really going to come back. We had a little decent news on First Solar, and when we look at it, it has been able to move kind of up off the floor, but with the exception of a couple of days of huge volume, And today, again, it seems to be crawling its way back up a little bit. CSIQ is another one. This one I like a little better in the solar space, Canadian Solar. And the reason why is I bought it in the last big bottom, which was 2009. We'll go back and look at it in just a second to really see what these long consolidation patterns look like if we get a chance, especially when the gentleman that was calling about Brinks and looking at these volumes really dry back up as we go back into the lows, where there isn't a whole lot of difference. But Canadian Solar not looking all that bad out here. Of course, it's a less expensive stock. But you know, it looks like if you're looking at penny stocks, not too bad. But I'm suspecting that we're going to see some weakness in both First Solar and Canadian Solar if we have any fall off in crude pricing, which when we look at XOM and some of these others, really looks like maybe we've got some decent weakness in this energy sector. Anyway, I was going to just say, as we go back, let me see if I can go back just a little bit farther. Do I have to go back to get 2009? There we go. When we came back, it's probably a little hard. Maybe see if we'll, let me get back here. Let me see. This is the patterns that I like, and that is we had a couple of huge moves down in Canadian Solar back into the fall of what was it, 2008. Then you actually made your big low in that March 2009 time frame. But this is really what I'm looking at, and what you didn't see in something at Brinks, and why it wanted to go sideways for so long. You have your big low. You need a little time for the steam to build, but you also want to see all the energy kind of pretty much pop out. We're going to get and zoom in just a little closer to this. But this is what I really love in a stock. You had the market turn at the same time, but when you look at Canadian Solar from the November 19th low of 2008, it got down to the $3.11 price range, 2.2 million shares. We got back down to $3, almost coinciding with that March low in the total markets. But the volume came in at 340,000 shares. And if you just look at the volume underneath that consolidation range, this is when those things consolidate out. Almost all the volume is gone out there. Then you get that huge move up off the bottom. Now, I didn't get all of it, but I certainly got at $3 enough to make up for a lot of small trades over the time. And on that one, I ended up trading out on it on that gap up, which is right there on volume. That was on 8/6 of 2009. And you know, probably could have held on to it for a little longer. But those are the kind of long-term rewards. Of course, we haven't had a major bottom like that, so we're not going to see anything. But that's the equivalent on the top side of a very light volume test of a top. But when I go back and look at those, probably the teachable moments in stock trading, and what we don't see now is just that. Let me go back to a 6-month on that, and that is you really want to see maybe even a little bit lighter volume, and you know, it needs to get back into that gap level, maybe about $2.50, and I'd really like this thing. Anyway, give me a call. You still got 8 minutes left. 877-927-6648. That's 877-927-6648. We'll be glad to talk about your particular stock.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, we're going to have about 3.1 billion shares today. If volume holds up at the run rate it is now, we're about 2.3 billion shares. We had 2.75 billion shares yesterday at the close. So, we've got to look at, just very, very light trading is today. If we would have had like 4 billion shares or something today, would have said that it was more likely a signal and we were moving than just market gas from the end of options rollover. I don't think, we're probably going to close something like probably S&P points, maybe +3 or minus from 14.15, so maybe 14.12, 14.18 range by the end of the day, at least at this volume, unless some kind of news comes along. But right now, just not a whole lot of movement in the market or action. We brought up natural gas, and probably the thing to look at is on that is we've been coming into kind of some lows out here in UNG. One of the things you have to know is that there is contango in some of these ETFs compared to the underlying commodity itself. We are having a little doji out here. Normally means that we're either probably going to have, this is the halfway move of this market, or we have put in a bottom. I like the way this thing's been trading, at least for the ETF on volume, giving us at least some kind of idea that we've got a temporary floor. On July 12th, we hit $18.56 as the low with 25 million shares on for the high in that range. We pretty much have had 14 million shares, and last few days 4 million shares, 7 million shares, 10 million shares. So we're starting to get a little bit more interest coming up here, a little overhang out here. Of course, we had some decent volume at the last high, but not big volume. We had a big volume day just before it started heading back down off the high at 40 million shares. And if I go back and look at it, I bet that had something to do with the rollover in the contract. But I will, since we didn't have really that big of a price move that day, but we'll see how that. But anyway, you've got a lot of volume. It did head down after that. A nice big candle the day after, at least on about 17.5 million shares. But you do have a floor in here, probably somewhere in the low 18s. Have to watch the contract itself also, but not bad. Looking like it's setting up kind of interesting. Of course, tomorrow we have numbers at 10:30 for crude, and then Thursday we're going to have numbers for natural gas. Probably the holdback in natural gas is we do need some kind of pipeline. We need ships outfitted with the ability to actually hold the stuff. Transportation's still an issue, but natural gas, wasn't that long ago, was expensive. I know that there's a lot of it. If this is going to be the kind of move I think it is, it's going to be one like we think of gold, and that is, the thing went from, 285 to 400, and then meandered in the 300s for a while, then got up to 600 and pulled back to 450, and then 450 kind of ran up to 1,000 and came back to 800. Every time everybody said it was over, and I suspect if this move is not going to be a one-year move in natural gas, I think it's going to be some kind of long-term 10, 15, 20-year move based on a change of us using natural gas. So don't look for this thing to be a flash in the pan. It's probably going to set up a nice move. It's something you're probably going to have to hold for a while. Anyway, we will be back tomorrow, and tomorrow night I've got my webinar on trading like a computer. See you then.